Good morning, traders. It is Thursday, July 24th. Let's take a look at the markets this morning. We got some mixed markets. We have the NASDAQ up the most, up about 1/3%. It's kind of the opposite of yesterday. We have the Russell down 1/3%. So money's starting to flow into some large tech this morning, kind of out of a bit of broad market, which is the small caps and the Dow. The Dow's down about 0.5%. Overall, the market's trying to push and grind higher. And I want to touch on a few questions from users here and just kind of go over those because not a whole lot has changed in the market. So I want to answer some thoughts, questions, concerns, and all of that stuff. So the first one was a question about the SPY stops for our ACS strategy. Now we got into ACS over here. It's been running up. The person said we haven't moved our stops up since we got in. We actually have moved our stop up. We got in, we hit a first small target, a very defensive target because this market could have very quickly rolled over. We do have a break-even stop, an entry price stop. Now, we are on the verge, like a tenth of a percent away from hitting another target at 12.5%. If we hit that, then our stops will be moving up quite significantly, which we'll update on. But overall, it's not the stops that actually are the most important part of this with our strategy. Our stops are in place in case things go terribly wrong very quickly. What's going to happen is the market eventually will start to weaken and start to change. And what we'll have, just like back over here, is we'll have the market pull back. It doesn't have to pull back very much or for very long, and we have a trend change. The trend change is generally how we get kicked out of trades, not a stop that is generally moving up. So expect more so of a trend change to kick us out, not price to crash and come all the way down to a stop. And mind you, hopefully we'll hit this target. We talked about it yesterday. Once we hit this target, we really at that point we kind of want the markets to roll over and die and head lower and give us some more opportunity, but. Because we'll have most of our position in cash. We'll have locked in most of our SPY. We've locked in all of our QQQ for a 15% target as well. So that is kind of the stop view of why we haven't moved it up. Our strategy does as things mature, but we have a trend change system in place that will kick us out generally well before a stop in a market condition like this. Now, the other one is from a lady talking about She's really struggling. She got into the market and she said she hasn't made any money this year. Her SPY target is a little higher than ours. She's wondering if this strategy is good for her portfolio. And that right there just tells me a couple quick things to be aware of. If you've been using our service this year and following the ACS strategy, your account should be hitting new all-time highs. Our accounts are moving higher. So if you're not, then you're not following the trades, the specific ACS trades, which are the ones that we focus on. And on top of that, the comment says her target is a little higher than ours. So even if she is following the trades, they're not the same. She's altering them and trying to make it better. So that's what people join us for, is the strategy, are the signals, because they are proven, and it takes a lot of this emotion out of the market. So again, follow a proven strategy. Don't try to navigate. That's what I specialize in, is a strategy that can pull money out of this market and do it in a way where we don't have to stress and worry and all of that. Now, she went on to talk about she did move her money over into the US dollar a while ago. We did talk about this a few sessions ago in the morning video. Where do I draw a pencil with Trading View? Long story short, here we go. A lot of people joined and make big trading decisions at key turning points. A lot of people over here, a lot of people are doing the same right here. This is where people give up on things, or the dollar, they move out. Over here, they pile in, and then it goes against them, and then they want to get out. So I think this person ended up, rotating. And this is what most people do with even trading strategies. The market, they usually get in at the wrong time, and they flip strategies just before they start to work, right? And so the dollar here is definitely struggling. It's trying to figure out if it can find a bottom, but more or less, a lot of people convert over here and then move, if you're Canadian or a different currency, moved into the dollar. Of course, this was huge emotion. This was when massive people were making drastic changes to their portfolios and all of that stuff because what they had before didn't work. And then, of course, this currency play, now it's down at a point where it's hitting a breaking point. And we see this with our inbox indicator. We see the comments. We see all of that stuff with people. Is the exact opposite of over here. And it's usually indicative of a turning point. Overall, the US dollar long term, when we look at the long-term strategy, we go way back here. It is still... something's frozen here. But overall, it is pulling back down into a critical support zone, into this giant bull flag pattern. We've seen it spike up to these levels many times. We talked about it when it was up here. Wouldn't be surprised if it has some big pullback and pause and chops around. I am still actually bullish on the dollar at this point, but it definitely needs to find support. This is a decade-long pattern that's unfolding, and it has to have lots of wiggle room. And I don't know if this will go back any further. I guess not. But that's kind of where we are in terms of the dollar exchange. So in terms of the strategy that we do, it works exceptionally well. Just ask the thousands of members that we have, look at our comments, and try not to alter things. And again, if you're going to switch currencies, the currencies are always a wild card. It doesn't matter really what you do. There's always going to be something that we can't really fully control that well. And if you're switching currencies or even holding your own currency, you could be gaining or losing based on that currency. But we can't always protect ourselves from every single asset moving. We do have to just eventually focus more or less on the core strategy, which is how to make money in the stock market. And whether you trade the SP 500 in a Canadian currency on a Canadian ETF or a international currency and an ETF on your exchange, or you convert over, there's always going to be some wiggle room. There's no way around it of how things are moving. And the key is to not make emotional decisions and to have a strategy in place, not just to jump ship because you get nervous. And that's generally what people do, is they make a decision, they get into a trade from FOMO, they can't take the pain, or they get out because they don't know what's going on. And so overall, strategy is very solid. It works exceptionally well. The key is to not mess around with it. And that's kind of the reality of it, and to put time in. This is an investment strategy. It's not about what a few months do in a strategy. It's what happens year after year after year, no matter what the market does, and being able to avoid chaos and reinvest and push our accounts higher without a lot of downside risk. What else do we have here? We have another person talking about gold, wondering about Fibonacci gold. He was saying that I was talking about a retracement in gold, a big retracement in gold, which he's talking about, from what I gather, the big reset. So if we go into a financial reset for gold, let me just go way back here. Financial reset in gold, that gold will have a big pullback. And for some reason, he's thinking that this little pullback that we had, well, it's consolidating in this sideways little, bull flag pennant formation. He thought that was the pullback. And what I'll be looking for is something more significant. If we have a big financial crisis, again, it depends where gold puts in a top. There is potential for it to rally up pretty significantly. And when we do have a financial crisis, if it does even rally to 41, it could pull back fairly substantially. It could pull back 20, 35%. And still have a pretty big reset from where it is. That would be equivalent to about 2008 financial crisis, back down into the 3,000 high 2000s potentially. So right now, that reset that I've been talking about, that big one, has not happened. It is still in a bull market phase. It is still trying to figure out if this is a top or a launch pad. At this point, it looks like a launch pad. A top won't be confirmed until it actually breaks down. You need a trend to change to know it's a top. But at this point, it is still showing that pop. And I do think, as I mentioned, I think there's opportunity to the upside. And eventually, I do think it'll have some type of big reset and correction. But again, we don't bet on that correction that's not here. That's going against the trend, which is up at this point. So hopefully that kind of answers that gold question. Another member wanted to look at uranium stocks. Not a whole lot has changed from we got in, we hit our 20% target in uranium stocks. Now it's just working itself out. It did generate a new trigger down over here, which we talked about in the members area, how it's a trade that you could potentially get in and it has potential to move higher. We could take a conservative, I think somebody wants a Fibonacci value on this. We could go, it's tough to say where we go from because it's kind of a steady grind. We could take a conservative play from here to about here and down to here. Overall, perfect. It has hit that 618, that golden ratio. It's having that hiccup. And that means that we probably will see uranium go up to 43.87, give or take a few pennies. So it's got about a 6% upside potential. It could pop literally in 1 to 3 days, the way uranium moves. So it's still in a nice uptrend. As it moves up, just be very cautious to move your stops up. Somebody did ask yesterday also about what they should do with their stops in uranium. This was actually a different person. They usually have a 5% stop and a trailing stop, and they're wondering if they should drop down to a 3%. My thought is, if something that's volatile like this, that moves 3 or 4, 5% a day at times, you don't really want to put too, you actually don't kind of want to tighten up the stop. You almost need to give it more wiggle room, or keep the same wiggle room, and just know it's going to chop around, and you're probably not going to get out at the top. If you get out at the top, it was just a lucky target and the price rolled over, or you picked the top and that was just a lucky shot. You're going to know eventually it's going to come up and it's going to chop around and roll over and hit your stop and kick you out. You just have to be, when I say a trend is, getting closer to the end and it could start to roll over, you can tighten things up. But if it's a volatile asset, you do need to let it have some wiggle room until you're really satisfied with what you have. Then you can tighten it up and be like, okay, I'm happy on any little pullback. If it kicks me out, I'll just get out and I'll be happy with it. But when I say it's getting close to an end, I'm mentally preparing you. Just know this. It might roll over, give back some of the gains, and the trend might end, or your stop will get hit. And you have to just accept that. It's not about getting out at the high and saying I nailed it. A lot of people, for some reason, think after it tops and it starts to sell off and moves down, and then your stop gets hit, or your trailing stop or whatever. They feel like they took a loss because they gave back so much. And if you look at it that way, you're really going to always suffer in trading, and you're always going to feel bad. So you don't want to think that way. Just know you're going to give some back, and just be like, how much of that middle safe zone, that trend, did you get without a whole lot of downside risk to your portfolio? That's the way to look at it, versus trying to maximize how much you're going to get out of every single trade and nail the turning points. All right, somebody wanted to look at platinum. I touched on it a few times. I'll just pull it up really quick here. Platinum's doing that running correction. If you didn't see this, I think I talked about it yesterday, maybe in a video. I can't remember. It's dangerous. It's going to get really volatile. It could blow off and have a massive rally followed by a huge sell-off. Just know this pattern is dangerous. And if you're not in it and you want to get in, just be careful. Be really careful. But somebody wanted to see that is platinum. Let's look at palladium. Palladium is very kind of similar. It's kind of running up. It's got lots of volatility. It's flagging up. So I live on the water. We have a little island about 500 yards or so from our house, and there's a flag on it, a flagpole. And my daughter and I love sitting out when the storm fronts come. You see a black line of clouds. You can see the wind and rain line coming. And what happens is usually a flag is, the flagpole, and the flag is flagging down in the wind. The weight of the flag kind of carries the flag down. And typically that means you're going to have a big rally in price. Well, when you have a flagpole up and it's actually flagging up, it's streaming higher in the air. That means there's a ton of power. There's a ton of momentum. Usually these can end in an explosive pop followed by a big sell-off. They are dangerous. They are just like a running correction. They're kind of like a mini running correction. So just think that at any point it could drop drastically or have a huge pop followed by a big drop. So if you're trying to pick a top and sell it, it could go higher and really squeeze you out and then crash. So a flag with a flag going up means it's super strong winds. It's volatile. And just be cautious of that pattern as well. So I'm not a huge fan of palladium. Let's just zoom out, look at the bigger picture. So it has been in this kind of multi-year base, stage one. I would say it has broken out. If we just kind of grab across these highs, you can see here it was in a big stage one base for a few years. It's breaking out, and that's a great sign. I'm not a fan of buying it in this pattern. It might want to stream higher and move up into this area, but eventually it's going to want to pull back. So even if it does push higher, eventually it's going to build a launch pad, a bull flag pattern. That would be more exciting. When it starts to break higher, then you're going to have huge potential upside to really take advantage of that play. So it looks like it's turned a corner.
And now it's not so much chasing it and feeling like you got left out, but let this move burn out. Let it fizzle out. It will. It always will. It's just a matter of time. Wait for a launch pad, and then it'll be ready for the second half of the move that you can catch with lower risk. I just need to touch on one thing with this book. There's a little bit of confusion. So we updated Technical Trading Mastery. This is the second edition. There is not a third edition coming out. With the way Amazon and the print on demand, we can just go and edit the actual transcript. So it's this exact same book. You just purchase it, and it has the updated content inside. So that has all been updated. Really, the core focus of the update was Chapter 10, Identifying Trends. So it's all about the key moving averages, which I used a mix of simple moving average and exponential, which we updated in the book to what I use now and what I've actually used for a very long time, because I wrote this initial book many, many years ago. This was just the second edition. And then the things that most people really, really want, well, you need to know the trend before you can use these other indicators. This is the overbought, oversold indicator on the 30-minute chart. So, the green, lime green shaded oversold and the red shaded background for overbought. And then we got the panic selling and the FOMO indicator, chapter 12. So that's where you're going to find these. And then in the back of the book, it has the last couple of pages. It has all the details of how to set those up, the exact values, chart settings, timeframes, all of that stuff. Other than that, I think that is about it. Yesterday, my son and his friend, it was so funny. I did this as a kid with my best buddy. We have a tin boat with a 6 horsepower motor. And they went out and rigged it up, and him and his buddy were surfing, tow surfing behind it out into the bay, which was pretty epic. This is this morning. It is a strong offshore breeze. It's a beautiful, beautiful, warm tropical breeze this morning. But super funny that they're out there surfing. I did the same thing, and they're just in paradise having their own mini wake boat that they could legally drive, because the Sea-Doo and bigger boats, they obviously are too young. He's only 13. But and then on top of that, we went for a little sunset cruise. This is them. We paused for a minute to watch the sunset, and then they both flipped off. Anyway, hopefully everybody has a good day. We'll catch up and see how the markets unfold. Take care. Bye-bye.